Hi, welcome to chapter number 1, and in this chapter we will be talking about trading strategies and how do you decide your time frames in which you will trade. According to the structure of a chart, I strongly believe that we can have three different setups, three different structures in which one can look to trade the market. They are your breakout strategy, the contrarian strategy, and the swing trading strategy. And in this particular video, I will be focusing on this breakout strategy per se. Now, what is a breakout setup? So, breaking out of a certain congestion in the market. As you take a look at this drawing, you will notice that the market was in an uptrend and it had created certain amount of resistance. It was hitting a certain price from which it was coming down. It's called a resistance. And if someone looks to buy once this level is breached at this price, if you're looking to buy, then you're a breakout trader. So, you're essentially buying high. You're waiting for the price to break above a certain resistance, a certain ceiling, and then you buy. So, you're waiting for extra bout of demand coming in. The other side of this breakout trade is a breakout trade on the downside, where you wait for a defined support to shape up, and once you have found a price level where the market is finding a decent amount of demand and the supply or the selling to some extent has eased off, and later on if this level is breached and broken, it means that a fresh bout of selling supply has come into the market, then you are a breakout trader. You are looking for the prices to break down and you're willing to sell at a lower price. You don't hesitate to sell at a lower price. Breakout trading need not always be above a resistance or always be below a defined support. You can also look into certain kind of range based breakout. Now, over here you have to first define the range, and by definition of the range, let us say what I have done over here is I have taken an example of 5 trading days. These are your recent 5 trading days. And then what you do is you define the highest point of these 5 days. I have numbered it H5, and you find the lowest point of these 5 days, which is L5. So, H5 and L5 is the highest point of the last 5 days and the lowest point of the last 5 days respectively. And a breakout trader will be looking to buy once this range is broken on the upside. It means you are a breakout trader, you are buying strength. On the other hand, if the low is broken, then you go short or you sell, you exit. That means that you have been waiting for the lowest point of the last 5 days to break. This is a sign of weakness and you sell. So, breakout trader always buys strength and he always look to sell weakness. In this video, we discussed about the breakout trades. In our next video, we will take up the concept of contrarian trades. But before that, I am going to take you to some examples on the chart so that you get a very clear understanding of what a breakout trade actually looks like on the chart. So, this is the daily chart of Nifty, and as you can clearly see that we had very good supports down here. And when the market broke down below this support, this is a breaking down of a support, and this is where a breakout trader, if you are selling, exiting here, especially going short on the market, then you are a breakout trader yourself. On the other hand, if you look into the same chart and you find that this was a resistance and the market breaks above that high and goes further up, and if you are buying on this particular day, because of the fact that this resistance is now broken, then you are now a breakout trader and you are buying high with the anticipation that you get a chance to sell higher. So, that is a typical breakout trade setup for you. In our next video, let us talk about contrarian trading setup.